Let's bring in Ryan Leman. He's the advisor to the board of directors at Securrency Capital. Ryan, welcome back to the program. What do you think is going to be one of the big takeaways from the earnings announcements as they continue to percolate?
Good morning, Yusuf, and great to be back. Thank you very much. So let's start with Saudi Arabia. In Saudi Arabia, we're looking at three major sectors. The first one is the banking, the second one is healthcare, and the third one is energy. On the banking sector, we think things are quite positive in Saudi Arabia. Net interest margin continues to improve because banks are lending more and more to the retail sector, which has higher margins. Also, non-interest revenue is increasing as well. So we do expect positive news on the banking sector earnings in Saudi Arabia. On the energy sector, obviously Aramco and SABIC are the big boys in the room, and their earnings are quite positive. However, we expect less good earnings on other energy companies because of the foodstock increase in cost, which has not been translated to the consumers yet. On the healthcare sector, the two major companies in Saudi Arabia also are surprising to the positive side on improved efficiencies.
What about the benchmarks that you're using to get a better understanding of valuations? Because I look at sort of the PE ratios on an index level, and I look at the Dow, and it's still mid double digits, and compare that to Dubai and Abu Dhabi, and massive disparity, sort of mid to higher single digits. Is that really the benchmark to be using, or do I need to dig deeper, sort of sector level, to kind of get a better grip on things here?
100%, you said it correctly. We don't look at benchmark PEs, to be honest. Even in the US, we don't do that. It's much more fundamental than that. So we really dig deep into the sectors. We look at what's going to happen in the future. So let me give you one example. Here in the UAE, 49% of companies have announced salary increases. So this is very positive for the retail, who will spend more, consume more, take more retail loans. So this will translate into better net interest margins. So this will translate into better earnings for the banking sector. So the story has much more to it than simple PEs at the index level and just simple benchmarking.
One of the things that I was thinking about in my conversations in Jeddah was about, trade partners versus political priorities. And I look at the United Arab Emirates, and as much as it has a close and important relationship with the United States, the key trading partners are not the United States. They're all in Asia. It is China. It is India. Is that orientation going to continue, and is there a investing theme around that perhaps in the UAE as well?
100%. I agree with you again. That's why we're very positive on the GCC over the next 10 or 20 years even, because the GCC is literally in the middle of the world between East and West. It has very good relationships with the East. The currencies now have appreciated substantially on the back of strong dollar, and currencies here are back to the dollar. So it is in the best interest of the GCC to continue that diversification of trade partners, particularly eastwards. If we look at eastwards, populations are 3.3 billion individuals, whereas when we look at the G7, it's 750 million. So GCC have seen that, and they've started this diversification eastwards 5 or 7 years ago.
I mean, you may be positive on Gulf equities, but I look at the portfolio, look at asset allocation, you've actually raised the cash component. And it's not 20 or 30%, it's as high as 40%.
Absolutely. Well, because our portfolios are rather international, and they have a big bias towards US equities. And since we are negative on US equities, we have reduced that portion substantially. So it's more convex strategy that protect us during downward trends, as we're seeing right now, and the very violent bear market rallies that we're seeing. So we're using convexity option strategies, we're using credit derivatives and others. And one of these hedges are GCC equities. But we do remain quite cautious, hence the 40% cash allocation.
We'll leave it there. Thank you very much. That's Ryan Leman there with the insights. He's the advisor to the board of directors at Securrency Capital.